Hello and welcome to this video about data migration in Dynamics NAV. So the purpose of this video is to help you understand how to migrate data from your previous accounting system into Dynamics NAV. And this is obviously in connection with an implementation. So this video will consist of two parts. First, I'm going to give an overview of how this migration is going to take part. And next I'm going to take you through a practical case where we actually go into Dynamics NAV and perform a complete migration of data. So this method that I'm going to show you is one among a few. It's the one that I was taught about 15 years ago, and it's the one that I've been using ever since. There are a few more simpler ones, but this is more solid, and it's more it restrains errors to a higher degree, or avoids errors to a higher degree. So when you do a migration, you could divide your data, or you can divide your data into three different kinds of data, or three different parts. So the first kind of data that I would like to draw attention to is what is called master data. And this master data is customers, its vendors, and its items. And usually this kind of data, master data, is migrated before go live. And the reason it's migrated before go live is because that usually customers, vendors, and items do not change that frequently. So you can migrate this data very early, maybe as much as 2 weeks before, if you have a very stable selection of customers, vendors, and items. For example, if you've been trading the same with the same 2 customers or 2 same vendors, selling just 2 items for the last 5 years, then it's unlikely that it's going to change. But if you have a lot of customers and maybe create hundreds of customers each day, then you need to migrate the master data rather close to the actual go live. Then the next kind of data that we can focus on is what is called transactional data. And this kind of data changes so frequently that it needs to be migrated during go live. In some instances, you can actually wait until after go live with this migration, but usually to run your business, you need to have your item ledger entries, which is in effect your inventory. Otherwise, it will be difficult to perform daily operation, the most basic ones. You also want to have your customers' balances in as soon as possible, and the same goes with vendors and bank ledger entries. So usually this transactional data is migrated during go live, and the go live might be a weekend, for example, where you shut down your previous system and spend Saturday and Sunday migrating the data to NAV. And then finally we have what is called financial data. And the thing about migrating item ledger entries, customer ledger entries, and vendor ledger entries is that this will update the ledger entries, of course, but it will also update your finance. So it will also book into your chart of accounts or to your general ledger. But obviously it will not update everything. So whatever is remaining of your assets and liabilities need to be migrated as well. And this can actually, usually it can wait some time after go live. I recall once that there was a company who didn't migrate their financial data, which is usually called the opening balance, until 9 months after. And the reason was that they actually didn't need that data until they had to close the year. So when we migrate this data, we are going to be using a special opening balance account. And usually I choose to give this account the number 8 times 9 to make sure it goes all the way in the bottom. And the reason we need this is that I've written here, because you don't know where the counter postings have gone. So assuming you have an account such as, for example, sales VAT, and it has a current balance of, let's say, $10,000. The problem is that if you want to put $10,000 onto that account, you need to also have the counter postings. So you need to choose both a debit and a credit. But the problem is that for that particular balance, you have no clue, or at least it's very difficult to find out where all those counter postings go to. If you have a sales VAT account, some of the counter postings will go into your sales area in your P&L, and some of the counter postings will go into your accounts receivable in your balance sheet. So this is a little bit, this might seem a little bit strange, but it will become more evident or more clear when we actually go through the practical case where I'll show you how this account is used. So when you have migrated your entire opening balance, this account will drop to 0. And that is you could say it's a controlling measure to make sure that you have migrated your entire opening balance. And then the final point that I would just like to mention is automation. So if you've got 2 customers, 2 vendors, 2 items, 1 or 2 customer ledgers and some vendor item ledgers, then you'll just migrate all of this data manually, which means you'll enter it into journals and click post. But if you have hundreds or maybe even thousands or maybe even tens of thousands of transactional data and many items and vendors and customers, then you should consider putting this in with a data port or an XML port or some sort of other piece of code that can import this information. But regardless of whether you do it manually or automate some of the process, the method is the same. So it's just going to free up your hands where the task is repetitive. Alright, so next let's have a look at this practical case that we're going to mimic in NAV. So in essence, I'm going to go to NAV after we've just had a quick talk about this slide. I'm going to go into NAV and then I'm going to perform the full migration of all the relevant parts of data. So in this case, we have our balance sheet or our chart of accounts here, which is from the previous accounting system or the old accounting system. So you can see we have our assets and we have our liabilities and we have our profit and loss down here. I've just used this one from NAV, but it could really be from any accounting system. So if we look at our total assets, we can see that we have some money in the bank, we have some inventory and some receivables, and it comes to a total of 11,240. If we then go to our liabilities, we'll see we have some equity, some VAT and some payables. But our liabilities are only 11,140, whereas our assets were 11,240. So there is a discrepancy between these two. Which might come to a surprise for some people, because I'm sure you've always been taught that the total assets and the total liabilities need to balance. So in effect, we would have probably expected these two to be the same amount. So why are they not the same amount? Well, the answer is, and if you're a little bit rusty in your debit and credit, you should watch my 2 videos, which goes through all the basics of debit and credit postings. So, but the reason these 2 accounts in our previous system, if you look in your previous accounting system, you will see that they most likely are not identical. And the reason is that the P&L is really a sub-account to the equity. So in order to balance the total liabilities and the total assets, you need to look down into your P&L, and you need to figure out how much money you've made this year up until now. So if we move this profit, which is in essence what you do usually during year end, if we move this profit up into our equity account, so that it rises to $10,100, $10,100, then you will see that your total liabilities increases to 11,240, and the assets and liabilities, they balance now. So when you migrate your balance, you do not want to migrate your P&L, your profit and loss. You only want to migrate your balance, and obviously your balance has to balance, and this is the way to do it. So over here you'll see when we've gotten rid of our P&L and we've moved our profit to our equity account, this is how it looks, and balances nicely with 11,240 in assets and 11,240 in liabilities. So this is also the balance we would want to look at when we've finished our migration in NAV. So it should look like this. All right. So here are some details over here about what else is in our system. And as you can see here, we have in inventory, we have, or our inventory is worth $1,000 or pounds. Excuse me. And those 1,000 worth of inventory is made up of 10 books with an average cost or average value of 100 apiece, so 1,000. And obviously we want the item ledger entries to go into the system so that we can trade with the items. In this scenario, we only have one item, and that's merely to make it as simple as possible. So when we come to our customer ledger entries, we also just have one unpaid sales invoice. So our customer owes us 240, which is also reflected over here. So after migration, we want this customer ledger entry to be present in the system. And yes, and then we have the vendor ledger entries. So when we migrate, or we can see from our opening balance that our accounts payable is $1,320 or pounds, and we can see here that this amount is made up of two invoices. So the first one is 120 and the second one is 1,200, and those two are due on two different have two different due dates. So we want to migrate those two as two separate entries. In fact, regardless of whether your vendor ledger entries and customer ledger entries, regardless of whether they have the same due date, you should never put them together as one. You should always just keep them separate. So we want to migrate two vendor ledger entries. And then we have the bank ledger entries. This is slightly different because when we migrate the bank, actually we are only just going to migrate the current balance of the bank. And but we do want one bank ledger entry into our bank account. And then finally we are going to migrate all the rest of the opening balance, which is not bank, vendor, or customer, or item ledger entries. Alright, but let's first just have a look at the company that we're going to migrate the data into. So we'll just switch to NAV here, and I've got the company set up here, and if we just quickly have a look at it, we can just have a look at the customers. So we've got one domestic customer, and in terms of items, we have got a single item, and we've got one vendor, and then we can just have a quick look at our chart of accounts, because something needs to be set up or added here. And what needs to be added here is the opening balance account. So I'm just going to create this. So I usually give it 8 nines. Let me just count while I do that. 1, 2, 3, 4, 5, 6, 7, 8. And then I call it opening balance account. Like this. Sorry, there we go. it is a balance sheet account, and this is fine. So we go OK. Alright, so let's look at the first part of migrating the data. And this first part is the item ledger entries. So if we go to NAV here, we need to go into item journals. Actually, we are already there, but item journals, and double click the item journal. Recall that we have just a single item in this test company, and just a single item ledger entry. So we need to input or fill in this item journal here, and we need to create a positive adjustment. We should give I usually recommend you give it a open and then inventory like this. If you start all of your document numbers with open, then something, then you can later on filter based on this document number, which is convenient. Then you need to choose your item here, the book, and then you need to indicate how many. And if you recall it, we had currently 10 on item. Each of those 10 had an average value of 100, so the total inventory value will be 1000. So let's try to post that. We're going to get an error message, but I'll show you how to solve it. So we post, okay, and then it says the general posting setup does not exist, and the combination we need to have a look at is the one between general business posting group blank and books. Once again, if you are rusty in your posting groups, I have plenty of other videos which goes into depth of the posting groups. So I'm just going to go and set this up. So actually the line that it's complaining about can be set up from general posting setup here. And what you might notice is that this didn't require a business posting group. It said that the business posting group was blank. Let me just get the error message one more time. So the business posting group is blank, and that is because when we're doing a journal, we are not trading with anybody specifically. But we do need to set it up for books because the item belongs to the product posting group of books. So we go into general posting setup, and the line that it wanted us to create was one where business posting group was blank and where product posting group is books. So we'll do that and click OK. And then we'll try to post again, and we'll see what happens then. So now it's saying, now it can actually find the line because we just put it in. But now it's complaining again, and the complaint now goes that it cannot find the inventory adjustment account. So we need to go and set that one up. And this is where that 9999 account comes into play. So we click on the line we just set up and we say edit. And then you go to the inventory part down here. And in the inventory adjustment account, you choose your 9999 account or opening balance account, like that. So this will have the effect of NAV booking into your inventory, just for the sake of, so you can see inventory post setup. Because the book, the item belongs to the books inventory posting group, it's going to update, it's going to debit our inventory account 1020, and then the credit is going into the opening balance account. So let's try to post this one. So they were posted. Then what were the implications of posting this? Well, let's start with going to our item card. I'm going over this a little bit quickly because it's quite similar to what I've been doing in the other videos. So we have our item card here, and we can see that now we've got 10 items on inventory. So far, so good. We can also go to our chart of accounts here, and we can see that we now have 1,000 in inventory, and our opening balance is credit with another 1,000. So this looks fine, and this looks as we want it to. Alright, so next we're going to have a look at how we get the customer ledger entries imported. And as I mentioned, we have just a single customer ledger entry in our data set, and it's 240, which is owed to us by our single customer, and it's also represented in our opening balance or our balance sheet here by 240. So if you go to NAV and have a look at how to enter this, you need to go to Sales Journal here and create just a single line, because we have only a single customer ledger entry. So again, I suggest you write open, and then you can use CUST. This is again convenient if you want to filter later on to identify all the data going in as part of your opening balance. So you change this to customer. While I remember it, of course the posting date over here needs to be the date of your opening balance. It can be any date, so that's why I'm just leaving it as it is. So our customer here, in our account number, you choose domestic, and then for the amount you would want to debit your customer, and then as a balancing account you would use this special account 999. If you have multiple customer ledger entries for lots of different customers, which is the most likely case, you can either put in the balancing account here, or you can leave the balancing account field blank like this. And then when you have inputted all of your customer ledger entries, or all of these lines, you can let the final line or the last line be the balancing line for the entire journal. So, but for this, in this instance, I'm going to put it here in the balancing account number. So let's get this one posted. Actually, we are missing something very important. So I'm just going to say no, which is the due date. And you can find the due date out here. If you cannot find it, you can right click and say choose column and find it in that way. But the due date lies out here. So in my example, I mentioned that the due date was 1 month from today. So we're going to do it, well, approximately 1 month from today. Then we can post it. All right. And now let's have a look at the implication or the consequences of posting this. So the first thing we can go and have a look at is the customers. And if we look at our domestic customer now, we will see that we have one customer ledger entry here, and that it is due as we expected to the date that we set. But in our chart of accounts, we also have some data, or some new data. So let's go there and have a look at the GL entries. So we have receivables, because we expect to receive some money, 240, and then as a counter posting, or the credit part, will go into the opening balance account here. So this is exactly as we wanted it to be. Alright, so the next data set we need to import are the vendor ledger entries. So we have currently 2 unpaid purchase invoices for the same vendor, and one is worth 120 and is due in 1 month, and another is 1,200 and is due in 2 months. So it was a total of 1,320, which is reflected in our opening balance on our payables account. So if we go to NAV, the way to get this in is to go to our purchase journals, and in our document number, once again, we start with open and then vend, for example. And then we change this one to vendors. Again, the posting date, of course, needs to be your opening balance. And in the account number, we choose our domestic vendor. So for the amount, it needs to be credit because it is going to update our accounts payable. So we need to go for the first invoice, 240. It was 120. Let's go with 120 instead, like this. And the due date was in about a month or so. So let's do that sometime here in April. The balancing account is once again going to be the 99999 account. And once again, you can also finish it off with just one line with everything in the bottom. So that was the first invoice. And the second invoice is also going to be for the same vendor, and it was 1,200. So negative 1,200. And it is going to be due in 2 months' time. There we go. And balancing account, once again, is this special opening balance account. So let's get this one posted. And let's have a look at what happened. Okay, let's start with a chart of accounts since we are already here. We now have our payables, and this was exactly what we wanted, 1,320. If we go back to our case here, payables 1,320. So this looks fine, and of course we've also got an entry into our opening balance account. So we can see the two here, and because we specified the opening balance account on a per line, we have one per line also here. Some people prefer this, some people prefer just one big one. We can also go to our vendor. Let's just go to our vendor card actually and have a look at our domestic vendor, and we will see that this has a balance of 1,320, which is made up of 2 vendor ledger entries, like this. So this also had the outcome that we wanted it to have. Alright, so the next data set we need to get in is our bank ledger entries. Once again, we only have a single bank, and at the date of migration, this has 10,000 US dollars or pounds worth of cash on it. And we can also see that those 10,000 match our bank account in our balance up here. So if we go to NAV, the way to get this one in will be through the general journal, like this. And again, posting date needs to be on the day of migration. And in the document number, again, you choose open and then, for example, bank. And you choose the account type as bank. This means that it's going to post to the bank account, and through the posting groups, it is going to post to the GL. So we choose in the account number, we choose our HSBC, and then we need to put in 10,000, and as the amount field always relates to whatever is in the account, and we need to put in debit 10,000, we need to put in 10,000 here and not minus 10,000. As the balancing account, once again we choose this special opening balance account, and we're ready to post. So let's go have a look at our bank account and see how that looks. So we can see that our bank account now has an opening balance of simply 10,000. So the other area or the other place where it has had an impact is once again in our chart of accounts. And we can go and have a look here. So our bank account now has 10,000. And once again we can observe the counter posting on our special opening balance account, credit 10,000. And as you might notice, steadily this opening balance is starting to resemble the one that we're trying to get in. We're not quite there yet, but it's getting closer. Alright, so now we have imported the bank account, which we did through the bank account module, so that we also got a bank account or bank ledger entry. The same goes for the inventory, where we now also have inventory or item ledger entries. We have customer ledger entries, and we have vendor ledger entries. So these were the 4 accounts or 4 types of data that needed to be migrated in a somewhat special manner. The next we need to do is to get the equity, the sales VAT, and the purchase, or in effect the rest of our opening balance in. And this is done through general journals. Just a quick look, we can see here what we need to put in. So these 3 accounts here. So let's go back to the general journal. So again, posting date needs to be on the opening date or the migration date. And I suggest you use Open Finance, for example, for this kind of migration data, the kind which is migrated directly into the GL. And we want to put this into a GL account, and the first one we wanted to update was our equity account. So, as we want to put in credit of 10,100, we will put minus 10,100. And let's just put in the other lines first here. So the next one would be the sales VAT. So we choose GL account again, and then sales VAT, this account, and we will put in minus 40 or credit worth 40, like that. And the last one was our our purchase VAT, 220. But just let's assume we make an error here, and this will show you the strength of this 9999 account approach, because we're able to adjust later on fairly easily on a one account basis. So let's just get this purchase VAT updated. So 2030 account 2030 purchase VAT. But instead of 220, we only put in 200, like this. So we should have put in 220, but by mistake we put in 200. And then we make, let's say we make, to get all of this balance, we just use one account in the bottom here, which is posting to our open balance account, like this. And we can see from the bottom here that we need another 940 to get this to balance. So we can see if we go all the way down, it balances. So, but recall we've made a mistake here. So, but let's get this one posted. All right, and then let's go and have a look at our chart of accounts, which actually is right here. So we can see. Let's go over the postings. Well, let me just jump straight to my point. Our purchase VAT is short of 20. And we can actually also see, if you have a very, very long chart of accounts, this might be very difficult to spot. But because of this opening balance account, we can see down here that we have an imbalance or imbalance of 20. So we need to so to speak, to move these 20 from this one, or we need to add another 20 up here. So let's just go back and do that. General journals and open finance. So we wanted to add some more to that sales VAT account. Or was it the, sorry, it was the purchase VAT account. This one. And what we wanted to add was another 20. So let's just put the balancing account over here in this example. All right, so we're adding another debit of to this account, this 2030, and that is what it needs to be increased. And because our balance account is our, well, opening balance account, it will credit this account with 20. So let's give that a shot. And we post. Okay. So our well, first of all, our opening balance is now down to 0. That's a really strong indication that we have at least a balancing balance. We could also add these up and make sure that it's correct. And finally, of course, we can compare it to our opening balance over here, and yeah, we can confirm that this looks exactly as we wanted it to.